Hi Forex traders, and welcome to this week ahead analysis video with me, 𝖢𝖥𝖣yi, Senior Market Analyst here at Blueberry Markets. I'm going to take you through the data coming up as well as some charts of interest. So first of all, kicking it off with the data, then we've actually got a lighter European session on Monday. We can see that there's bank holidays in Switzerland, France, Germany, and then we also have a bank holiday in Canada as well. Now, speaking of Canada, you have some inflation data coming up. We've got CPI month on month and CPI year on year expected to come in slightly lower, 0.1% lower, down to 2.7%. So heading in the right direction in terms of inflation, heading towards the target range of 2%. We've then got an interesting week for the pound. We've got Bank of England Governor Bailey speaking, but I think what the eyes will be on this week is that CPI year on year forecasted to actually come in at 2.1%, a significant drop from 3.2%, and I do feel like that will give the Bank of England the backing that they need in order to start cutting interest rates. Obviously 2% being that sort of key number of inflation which the central banks like to look for. So very close to that now. We saw obviously the MPC votes in the recent Bank of England rate decision looking for more cuts from the members, so it's going to be interesting to see how that affects the pound this week, especially because we do have flash manufacturing PMI, services PMI, and also retail sales towards the end of this trading week. In the US, we've got FOMC meeting minutes. I think obviously the market looking at other inflationary data in the US, so unemployment claims will be a big factor going into this week. Will we see a continuation of the unemployment claims, or will we see a decline? Now, obviously the Federal Reserve want to see an increase in the unemployment claims because that will have a direct impact on job growth in the market and potentially inflation. And then we also have PMI and services, manufacturing PMIs and services PMIs towards the end of the week in the US. But in terms of US data, pretty light apart from Wednesday. Going on to the currency strength meter then, the New Zealand dollar is the strongest currency at the moment, which is interesting considering we've got the RBNZ rate decision this week. The US dollar is currently the weakest currency, which we'll check out now. So we can see here on the US dollar index, the market definitely in that secondary phase here of this overall upward trend, and it's starting to show signs of a trend reversal here. Now we've got consecutive lower lows and lower highs forming on this daily chart, and we kind of found a little bit of a relief to the recent sell-off down towards the 104 lows which formed back in April. And you can see we've also got this trend line support where price also reacted to. So it looks to me like on the lower time frames, whether on this H1 time frame down here, we've had selling coming in again and a consolidation. We could see selling pressures continue for the US dollar this week. Going on to cable, so cable in a really interesting spot. Again, considering we've got some key inflationary data coming up on in the UK. Price currently trading at 127. We broke out of this minor trading range, and as soon as we took out 126, we had a very fast move up to the 127 handle. If we trade through the 127 handle, I think 1.28 could be a point of interest. We can see on the volume profile chart here on the right hand side that we have lots of volume up towards that level. So I think if we breach that, it could be a good move to see towards 128. If we kind of stay below 127, we could see a move back towards the higher volume level, which has formed between sort of 125.63 and 1.2486. Going on to Kiwi dollar then, so obviously a very interesting week coming up. RBNZ holding rates potentially at 5.5%. And that could be a catalyst for Kiwi dollar to continue its recent upward move. We found support down here towards the 0.59 handle. We've now breached long-term trend line resistance, and we're trading within this value area which formed from the volumes of the recent high down to the recent swing low. So 0.62 looks to be the level of interest in the market at the moment. So I wouldn't be surprised if we did see a move towards that. Looking at the H1 time frame down here, we can see we had that sort of flag pattern development and prices breached that. So if we can stay above these recent highs or lows down through here at 0.61, then I think that price will continue to play a move higher. If we breach back down, price could come and test a little bit more towards the 0.6050, which would be this volume that formed on the 15th. Going on to the final pair, then we have US dollar CAD. Very, very interesting chart this. You know, we breached that 136 handle. I thought that would be a catalyst that saw price head towards 139. We didn't get it. Price turned around 1.3850 instead, and since then we've kind of retreated all the way back to this key swing level at 136. Something that I did want to note was all the volume resting below that 136 handle, especially down towards 134.70, which is this point of control that formed throughout this entire move. I think if we get accepted below 136, then price may want to seek that point of control, that higher volume, potentially even down towards 133.50. But we've got a very, very good consolidation building here at the minute, so you know it could go either way here for dollar CAD at this current moment in time. So keep your eye on the markets this week. Some really interesting data coming up, especially in the UK. Hope you have a great and successful trading week, and I'll speak to you soon.